The oil markets are buzzing with activity, and it's not just about supply and demand. It's about geopolitics, strategic reserves, and unexpected twists. But here's where it gets controversial. While some see rising inventories as a sign of oversupply, others argue it's a strategic move to stabilize prices. Let's dive into the details. The American Petroleum Institute, API, recently revealed that U.S. crude oil inventories climbed by 1.25 million barrels in the week ending August 29. This brings the year-to-date increase to a staggering 8.7 million barrels, according to oil prices analysis of API data. And this is the part most people miss. These numbers aren't just statistics. They reflect a delicate balance between production, consumption, and global events. Earlier this week, the Department of Energy, DOE, added another layer to the story. The Strategic Petroleum Reserve, SPR, saw a 500,000 barrel increase, reaching 405.2 million barrels by September 5th. This move raises questions. Is the U.S. preparing for potential supply disruptions, or is it simply managing existing stockpiles? The answer isn't straightforward, and it's sparking debates among industry experts. Meanwhile, oil prices have been on a roller coaster ride. As of 10:05 a.m. Eastern Time, Brent crude was up 92 cents, plus 1.39%, at $66.94, though it later eased to $66.42 by 4:20 p.m. This volatility isn't random. It's driven by a mix of factors. Israel's recent strike on Hamas leaders in Qatar added to the bullish sentiment already fueled by OPEC Plus's decision to increase output by a mere 137,000 barrels per day in October, far below expectations. Here's the kicker. Geopolitical tensions, including potential new sanctions on Russia's oil supply, are keeping markets on edge. Is this the new normal, or will prices stabilize soon? It's a question dividing analysts. WTI crude also saw gains, rising 42 cents, plus 0.67%, to $62.68, reflecting similar market dynamics. But it's not just crude oil. Refined products are in the spotlight too. Gasoline inventories rose by 329,000 barrels in the week ending September 5th, a stark contrast to the 4.577 million barrel drop the previous week. Despite this, gasoline stocks remain 2% below the 5-year average, according to the latest EIA data. Here's a thought-provoking question. Are these fluctuations a sign of seasonal demand? Or do they hint at deeper shifts in consumer behavior? Distillate inventories tell an even more dramatic story. For the second consecutive week, they surged, adding 1.5 million barrels after a 3.687 million barrel increase the week prior. As of August 29th, distillate stocks were a whopping 13% below the 5-year average. This raises concerns about heating oil supplies as winter approaches. But here's the controversial take. Some argue that these low levels are intentional, aimed at keeping prices high. What do you think? As we navigate these complexities, one thing is clear. The oil market is anything but predictable. From geopolitical tensions to strategic reserves, every factor plays a role. What's your take on these developments? Do you see rising inventories as a cause for concern, or is it business as usual? Let's keep the conversation going in the comments below. For more insights, check out these top reads from oilprice.com. U.S. tariffs could/global petrochemicals trade. Oilprice.com, latest energy news, world news, U.S. tariffs could/global petrochemicals trade.html. China's curbs to excess refining capacity could take years. https oilprice.com/latest energy news. China's curbs to excess refining capacity could take years. .html. Iraq explores global crude storage with Exxon. https oilprice.com, latest energy news, world news. Iraq explores global crude storage with Exxon.html.